Okay, good morning, everyone. My name is Brian Cox. A lot of very familiar faces. Oh, this is kind of neat. Can we turn the volume down? It sounds a little loud, at least to me.
The people in the back. Can you move over to the side a little bit more or something?
Okay. Okay, and so this is a carry-on to work I've done now for 12 years of this stock portfolio. And we have been trading this as a group. We have a trading group that gets together once a month, and we're all partners in this trading group. And so we've been trading this specific technique for 12 years, and this is going to be talking about that and comparing it to how SPY performed. Okay, myself is my education. I have a Bachelor's of Science in Electronic Engineering, plus graduate courses in computer architecture and artificial intelligence. A financial trading experience. I've been buying stocks since 1982 through 2000. That's of course when we had the big stock crash, and I've also been buying or doing trading options since InvestTools and Thinkorswim in about 2004. So I've done options, I've been buying stock, I've been doing a little bit of everything. Okay, and today is I'll be sharing the performance of the Lizard stock portfolio through the pandemic, actually, post-pandemic. The portfolio is a stock club partnership that meets monthly basis. We're now doing this all virtual. We used to do it face-to-face. What I'm discussing is representing actual trade results, and the trading philosophy I'll discuss as I talk about this. Okay? The specific techniques have been talked in other presentations, and you can click on this link to get into a folder that has a much more depth discussion of each of the ways that we trade. And then in the end, again, we'll compare the Lizard's portfolio versus the SPY portfolio.
Is there a way we'll get a copy of your presentation?
Ken has it.
It's available on Ken
Oh, good.
at excessprofits.com right now, and the video for this whole presentation will also be up on our website.
Yeah. And in particular, if you need more background, go to this link when you bring up the presentation. Click on that link, and that'll go over to a folder with a lot more detail about how we trade. Okay?
Brian, I'm going to have you stop for a second because we are not recording. We need to be recording.
Okay.
Recording in progress.
Okay, we're recording now.
Okay, and of this table that you're seeing, the stocks that we currently have active are the top stocks here, and these stocks are ones that we have stopped out of. And so this is of the last 1 or 2 years. So you'll be able to get a sense of what kind of items that we've been trading. We usually trade things that have had growth in the past of 150 to 200%. And if you look at those, at least when we traded them, had that kind of growth. Okay? And so how we manage the portfolio is we continue to meet and trade once a month. We've been meeting virtually, pretty much following the sequence below, which is that we review each of the positions, looking at the charts and determining if it's time to move up stops. Because essentially what we do is we just keep on putting in trailing stops, and when a stock hits that stop, we sell everything. Okay? Then as a group, we discuss any new candidates. We look on a 2-year time frame with the TOS charts. And if the stock has potential, we look at the stock in a stock plotter at charts.excessprofits.com. And that's just another way of looking at the stocks, and that was the tool I built. And if we want to include it in the portfolio, then we buy a position based on constant risk. And again, that's discussed in more depth in that folder. But when we buy a stock, we're buying a set amount of risk. And as we move up a stop, we buy more to keep that risk constant. And so it's a constant risk approach. Then I've never seen anyone else approach it that way, but watching other presentations, I realized that if you can't control risk, you can't control your profits. And so I control my risks every time I enter a stock. Okay? Then we also look at stocks that we want to move the stops up in position one, and then we determine if we want to buy more stocks or buy more risk of that stock. And then we also have additional rules that limits any one position to less than 20% of the value of the portfolio. We don't want any one position to swamp out all the other positions. So we make sure that we don't exceed 20%. And if, because the stock has gone up and it exceeds 20%, then we'll sell a little bit, get the cash, and then put it in somewhere else. Okay? And so this is a typical way that we put on the charts. I call these things fish bones, because when you start looking at them, they look like fish bones. And so this is a Thinkorswim chart, and these black lines represent our support, and the red lines are where we put the stop based on that. And so you can see at this point, when we bought this position here, we call this 3 stops, or three positions down from where it was, and then we put the stop 2 ATRs underneath that. And we keep that stock in place until we move up the stop again, and then we move up the stock again. And just so that we can see clearly, I have these things called fish bones, which point to where we had the resistance at the time and where we had the stop at the time. And so you see these little fish bones growing as you go along. So this is a typical way that when we look at the stocks, we're looking at these.
Question. You say you set your stops at 2 ATR?
Below the support, yes.
Okay, so you determine the stop by looking at the graph?
Correct.
Okay, and what time frame is your...
Beth, we want to try to hold these questions to the end.
Okay.
Okay.
Okay. And so here's the Lizard's performance over the last 13 years. The main thing I always look at is the chart, and here's the actual gains that this chart has. And so you can see our compound, if we look at the end of last year, our compound annual growth over 12 years was 176%. It's okay. You know, if you get 15% per year, you'll double your money in five years, I think. And so in this case, we're a little bit below that, but at least we're not losing money. You know, some years are worse or better than others. Okay, but if you take this, and again, this represents us meeting once a month, 5 people. You know, it's not just throwing out a dartboard, but it represents some kind of work. And then along comes, here's SPY doing the same thing over the same years, for the same 13 years, and we have 103 or 110 compounded growth. And so it's like, why are we doing so much work? And so just as a comparison, you can beat yourself up and get decent results, or you could do something else and maybe get better results. And so this is just a comparison, a long-term comparison of what we've been doing. Okay? And so let's just do a quick comparison. You have those 2 charts, but if you do the comparison, let's see. There we are. If you compare the 2, you can see again, here's the Lizard's 12-year compounded growth, 176%, or we've got 310% by just buying and holding SPY. And so just a quick summary, you know, is that the Lizards, we continue to meet monthly and follow those trading rules. It's, you know, become a social thing more than anything else at this point. But my personal trading is that since I retired, I just don't have time to trade. You know, you think you can have all this time, but no, I'm too busy doing other things. So, you know, I've checked with my financial guy. before I retired, he said, "You're good." I said, "What do you mean I'm good?" "Well, if you live to be 95 years old, you'll still have money." So you're saying I'm good. And so, yeah. So because of that, I'm not trying to, go for home runs anymore. At this point, I'm just, trading and getting what comes back to me. So my personal trading is outside my managed IRAs, which is my whole retirement. I have a large position in Tesla and a large position in SPY. And so I've gone from complicated option trades to just essentially buy and hold. And that's my story, and I'm sticking to it. And any questions, or are we at 10 minutes?
1 minute.
1 minute, one question.
So, why not just get the Spire, go home and go to the beach?
That's what I tell my friends at the Lizard Club. I said, why don't we just buy SPY and then we'll meet up for dinner?
Yeah,
And so, why not?
you can buy a lot of dinners.
Yeah, exactly.
One more question. Yes.
For the Tesla, I know that this is strategy, so you don't sell the Tesla, right? In order to protect that, you use option to protect that.
You can do all sorts of things with Tesla. I have just bought and held.
You don't try to protect that.
I have no protection on it at all.
Just let it go. What is it?
I don't even have a stop on it. And so that goes against all my trading rules. But it's not a usual company either. I think it has a lot of potential.
All right. Thank you very much, Brian.